Join the conversation
with Richard Dean, Brandy Scott and Tom Urquhart.
You're listening to The Business Breakfast on Dubai Eye on One.
Where the conversation now is about property. The Dubai real estate market has seen its strongest ever start to the year. That is according to a report that's going to be released in a couple of hours. It's the latest monthly report from the guys at Property Monitor. And we have the Property Monitor COO, Zhann Jochinke, in the studio with us now. Zhann, it's lovely to see you. Good morning.
Morning. Great to be back in the studio with you.
I know, real people.
Yeah, contact.
It's exciting. So, we've got the strongest February transaction volumes on record here. How strong is strong?
Oh, very. So just over 6,300 transactions in Feb. That puts it up about 44% as the strongest ever February. So not just by a little bit, by a huge margin. And it also leads into the strongest start to the year ever. So we're looking at just over 12,000 transactions year to date. That's about 17% stronger than any other start to the year that we've ever seen.
What's behind it?
So it's a mix. I mean, transaction volumes are going incredibly strong across all segments, apartments, villas, townhouses, but there's been a bit of a shift from the ready property, the resale market, into the off-plan market, where developers have been putting more and more inventory into the market. Last month alone, there were about 3,000 new properties that came in, a total sales value of over 7.5 billion, and that builds on the back of what the month before and the month before that. So there's more and more coming in. It's purely inventory-led and demand-led right now. There's enough product out there, there's enough interest out there where the uptake's there. It's just switched where the uptake's happening. So where we saw last year heavily being in the resale market, now it's switched more to the off-plan market.
Did we run out of houses that were already standing?
We didn't run out. We just ran out of ones that were priced right. And you're seeing those now that are just sitting on the market. Sellers got a little too aggressive with expectations, got caught up in the rapid rise, asked a little too much, and they're just not moving.
Because we've also seen, while you're talking about the price, a record in prices in square footage for February as well.
Yeah, so this is one of the exciting ones. It's a nominal number, but 1,000 dirhams a square foot. We've passed that for the first time in over 3 years, and that was the last time in the down cycle. And if we look at the last up cycle, that's probably around June, July, May 2013 was the last time we saw that. So we're on this up cycle. We've passed that 1,000 dirhams a square foot mark. We're 16 months into a recovery cycle. If we look at the previous recovery cycle, it only lasted 24 months. Right? Prices were appreciating much more rapidly then. We're looking at 2.5–3% month on month. Last month, we went up just over 1%, a nice sustainable growth pattern. So instead of seeing a short recovery like we did last time, 24 months, we're now on track to, well, I believe we're going to surpass the peak of the last recovery, which was about 1,234 dirhams a square foot. We're just going to see a market that's not going to end 24 months. It's going to go 36, 48, maybe even longer, but just at a slower pace.
Explain your thinking to me there, Zhann. Why is this recovery different than the last recovery?
It's prices have stopped running away, which is one of the good parts. The fact that buyers have stopped chasing the ready property market, those prices that were jumping 10% month on month. It's a good thing that that stopped, because now we're seeing that market appreciation as a whole for Dubai at a sustainable pace. When I was on the show last time, I was saying we want to see it under 1%, around 1%, 1.5%. That's manageable, where prices go up, say 10% a year. But 30% a year, that's just dangerous and is going to lead to a bubble.
And you think that we're not looking at a short recovery this time?
Just because the way that things have slowed down, the fact that we've seen it's not just been a blip where there have been a couple of slow months, it's a trend of slow months. And now with mortgage rates changing and lending environment changing, that's also going to put downward pressure on the market and probably slow, maybe not the pace of sales, but the price appreciation of sales.
Talk to me about those interest rate rises, because we've seen the first one, haven't we, come out of the US, which effectively means that we have it too. And we've also seen the Fed chair warn that those increases could be bigger than we expected.
Yeah, so the first one coming out at 25 basis points, 0.25%. Next one rumored to be coming probably about double that. If you look at the base rate, it's still incredibly low. The interbank rate where it is, and then the follow-on rates what a mortgage ends up being, historically, that's incredibly low numbers. My last mortgage was at 6.25%. Like, bear in mind, it was a 30-year fixed rate mortgage in the US, but those small rates are going to come in. It's going to increase monthly payments for some buyers, potentially some buyers that were already stretching themselves maybe a little too thin. So it's going to remove some of those from the market. In the next year, if we see percentages go up a point and a half, yes, it's going to make an impact. It is going to slow things down, but money is still cheap. It's still a great time to borrow.
Are we seeing a change in who's buying?
as far as demographics go, it's pretty much your normal mix from the data that we've seen. It's the same mix as people that are buying here. It's expatriate based. It's Indian, English. It's a little bit more European now coming in. And they've moved from buying apartments to now buying more villas, is where the main mortgage transaction activity has changed. Last month, mortgages actually had a little bit of a bump. The reason they had this bump is because there was more mortgageable property that came onto the market. And what I mean by that is we had some handovers. Right? Yesterday, you were talking on the show off-plan mortgages, not that easy to get everywhere, some confusion around what values. Once the property's handed over, they're eligible for finance. These banks jump in. So we saw townhouses jump last month purely because of that.
So what happens next, Zhann?
That's the million dirham question. I think we're going to see things be mature, moderate. They're going to go slow and steady and sustainable. You're going to see developers really pump more inventory into the market. We're about 6,000 units in this year already. Expect to see that same pace. We're probably going to see 30 to 40,000 new units come into the market. It's heavily townhouse focused right now. I think they're underserving the villa market right now. So I think you're going to see developers also bring more villas in, less apartments, and you'll see a switch, I think, going towards off-plan sales again.
Well, before we let you go, Zhann, we know that you are a coffee drinker. A couple of espressos in the morning. Do you want to join our competition and name drop for us? Tell us.
Yeah, it's you, Brandy. It's the coffee at Expo at the Aussie Pavilion. What could be better?
Not sponsored by the Australian Pavilion.
Other coffee pavilions are available.
Other coffee pavilions are available. You flatter me. Zhann Jochinke is the Property Monitor COO. That report's coming out from the guys at Property Monitor a little bit later today, but thank you for your time this morning.
Thanks, Brandy.